All right, good morning, trade pros. Welcome to our morning market update for Monday, August the 27th. Time is flying. Let me just switch the camera so I could turn around. We got a good morning market update for you today, and I'm happy to share it with you guys. Just give me one moment, and it should work. There we go. Now I'm just going to turn around. All right, guys. So in today's morning market update, we're going to talk about Elon Musk and Tesla, the latest update from the weekend report. We're also going to go through United States and Mexico trade deal, or the NAFTA replacement, and what that's going to mean for currency markets. And last but not least, we're going to talk about why Jerome Powell's statement was able to rally the market and why it continues to go. We traded the Jerome Powell statement, by the way, with our elite membership team, and we had an opportunity there last week. So I'm going to tell you about what happened. And on Sunday's live webinar yesterday, we also covered it. But for YouTube, I'm going to very quickly give you a few pointers, not as much depth. All right, so let's start out first and foremost by going around the world, taking a little trip. In Asia, equities are green all across the board. There's a broad-based market rally in the works. In Asia, Japan's up 0.9%. Hong Kong's up 2.2%. China's up 1.9%. And India's up 1.2%. So strong rally across all Asian equity markets. That rally continued into Europe, but at a slower pace. At midday in London, markets are up 0.2%. Paris was up 0.5%, while Frankfurt was up 0.6%. And that rally continued into the futures pre-market here at the moment in the United States, with the pre-market currently trading with Dow up 0.3%, NASDAQ up 0.2%, and S&P up 0.4. Sorry, NASDAQ up 0.4, S&P up 0.2, and the Dow up 0.3. So basically, we started off with a really big rally into the Asian session open, and since then, the gains have decreased consecutively, and we are still up. The S&P 500 is now at an all-time high on the index, surpassing the previous level of January 26th of 2018. All right, so it took a couple months, but here we are in August, back to fresh highs in equity markets. So we're at all-time highs. In the weekend, we talked about how institutional investors were finding opportunities to get long. We supported that with data, and we told you who the buyer is going to be as hedge funds were short. And we analyzed that information together every Sunday in a live webinar format at 8 p.m. with all the subscribers. So no matter what membership you're part of, you have access to that weekly analysis webinar, and it's very popular. All right, we've been doing that since 2012. Crude oil is down 0.4 of a percentage point, along with gold, which is down 0.2%, a little bit of a pullback in commodities. And we're looking for an opportunity for those to be bought at some point in the near future as well. Just stay cautious, because as equities rally, gold tends to sell off. So this upside equity pressure might lead to a sell-off in gold back down to support, where we could find another long opportunity. Last week, we got a nice swing trade that we had held for 2 days and made great return single-handedly on that one trade. So we picked the good timing. Now we wait for another dip. I'm all out and in cash. I'm no longer in gold. But I am looking to get long once again. I'll keep you posted. All right, today's calendar, 10:30, we have the Dallas Fed Manufacturing Survey. 1 p.m., we have the results of a $26 billion 2-year note auction. That's going to shake up fixed income markets a little bit. Other than that, we don't have any key economic events today. It's going to be more slower and quieter, less volume. We're starting a week that leads into Labor Day. Next Monday, markets are closed. Futures close early at 1 p.m. Eastern. So we're going to start to get into some lower volatility summer doldrums, as a lot of institutional investors, traders, anyone around the market is taking vacation and some time off to send their kids back to school or to go to the cottage for one last weekend. So there you have it. Expect a little bit slower movement this week. I see upside for equities on low volume. There's going to be a low float, low shares exchanged. So for you as a trader, follow my 3 rules. Trade less frequently, trade less size, and take your profits and losses sooner. And you should do well in this type of environment. All right, U.S. and Mexico negotiations are hours away from squaring a bilateral differences on NAFTA and coming to agreement. That was news over the weekend, but Canada is more likely to be pushed off into September. So that hasn't been helpful in Canada, but U.S. and Mexico are about to pen a deal. Mexican economy minister Ildefonso Guijardo told reporters, I try to give it Spanish accent, sorry if I butchered it. All right, that's what he told reporters. He also said that Donald Trump saw optimism in this as well. Donald Trump later tweeting on the weekend, he said, our relationship with Mexico is getting closer by the hour. That was his tweet. A big trade agreement with Mexico should be happening soon. Of course, the US dollar is dropping while the Mexican peso is rallying on that news. So if you want to watch that pair, it's USD MXN in the currency markets. And that means if the peso goes up, the dollar goes down. So the USD MXN pair actually goes up. Down. Down. The US dollar goes down because it's the base pair. That means the Mexican peso is going up. So you're looking for actual short opportunities if you believe it's going to lead to a deal in the Mexican peso, which I do believe that. There is an opportunity there for a currency trade to swing to the downside on that pair. All right, Canadian dollar lost some gains and then recoup them overnight. So Canadian dollar is a little bit mixed. And I think there's still a lot of hopeful currency traders for the Canadian dollar, for the US and Canada to also reach a NAFTA or post-NAFTA agreement. All right, next thing we're going to talk about on Friday, Jerome Powell delivered his speech at the Jackson Hole Symposium in Wyoming, and that sent futures higher. Here's what he said. All right, he said that the central bank would continue with its tightening if the economy continued to strengthen. That's pretty much a status quo because we already knew that. But he said this, a gradual approach to rate hikes remains appropriate to protect the U.S. economy and job growth. That statement alone had the potential to squeeze markets to fresh highs because what he's saying here is being a little bit more dovish. Dovish means, yeah, we're raising rates, but we're looking to be accommodative, right? We're looking to add more liquidity into the economy or reduce rates or keep them at the current levels without raising them. That's a dovish tone. It's a dovish tone coming from a hawkish Federal Reserve chair and a hawkish Fed overall. And that gave life to the rally of just about everything. All right, equities rallied. The dollar got crushed on that news because obviously if there's less rate hikes coming, the dollar is going to do less well because less money is chasing it for the interest rate play. And gold rallied and equities rallied on that news. So that was the big driver, big mover of last week on Friday. And this week we're starting off with that sentiment. That was a very important sentence from Jerome Powell at a very highly publicized and anticipated event by traders. So you need to know that. All right. And of course, don't forget that Donald Trump told Powell that he is not thrilled by him raising rates so much, the Federal Reserve. And so this is seen as him maybe seceding or giving up some of that hawkish tone because of maybe influence of Donald Trump. That's how the market's reading it. And that's why you're seeing a little bit of a dovish interpretation, which sent markets higher. All right. Last but not least, Tesla's down 5.4% pre-market. Like I told our Market Analysis Live subscribers on Sundays when we do our live webinar, told you guys this will be down big. Elon Musk called off his $72 billion bid to take the company private. He tweeted and he said funding secured, and those two words are going to cost him a lot. And he also issued the price for Tesla. Now, he posted on the Tesla account saying the company is not going private. They're going to remain public, and the benefit of smaller shareholders who are afraid they're going to get squeezed out if it goes private. The smaller retail traders that want a piece of Tesla, it'll be harder for them to get in on a private deal. That was one of the concerns. Musk said he talked to the board and they agreed. And essentially, the company is not going private, right? Big surprise. We knew it wasn't going to go private. And here's the thing I'm going to tell you. There's going to be, this opens up the floodgates to shareholder lawsuits from both the longs and the shorts. So Elon Musk could potentially be in trouble here. SEC's already opened up an investigation. That one tweet squeezed out a lot of shorts that are going to be angry. All right. And as the number one officer of the corporation, the chief executive officer, and being the one that executes the board's vision, you can't do that kind of stuff. That's not a responsible move to disseminate non-material information or material non-public information to the market. It's not the right protocol to do it. 13F could have been filed. That would have been great. But look for some more news on this and the fact Tesla's no longer going private, back to the regular concerns of Tesla. And I think sellers are going to hit this thing one more time down to about 290. That's the support level. That being said, it's in a range. So Tesla's going to stay in that range. 290 is a support. We're going out for it. If we're not below it already, actually. All right, guys, that's what I got for you today. Stay to the upside. Look for long opportunities on dips. I get a feel that this could be a head fake rally. and we might get a little bit of a sell-off right off the open, and then around 10:30 things will pick up back to the upside and we'll drive higher. Follow volume, that's going to be your guide. And remember, you may not get a lot of opportunity. So when you do see one, jump on it. All right. Be patient. When when it's hot, you got to strike. That's what I got for you guys. We're under 1 week now. As of next Sunday, prices are going to be increasing. So I strongly encourage you guys to check out our website, TradeProAcademy.com. Find a package you like and give it a shot, because 2 reasons. Number one, this is the lowest price you're ever going to pay for it, because prices are increasing effectively on Saturday or Sunday night, rather, at midnight. And more importantly, you get a 2-week trial. So it's not a trial. You pay, but it's 2-week, not 2-year, 2-week guarantee and a refund upon your request. So it's risk-free. I look forward and would love to see you guys at the trading room. That's it for today. Got to turn around and trade, draw some levels, and open up the trading room. Thank you guys. Have a great day, and goodbye. We're hitting something here on the squawk, guys. I think we're getting some Mexico chatter. Thanks, Murky.